Good afternoon, and thanks for joining us. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's Higher Education Virtual Town Hall. The presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement, or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key.
All right. I also do want to let the audience know that we will have a few polling questions pop up throughout the webcast. You will receive a chime alerting you of the pop-up question, and we'll have a minute to submit your response. To respond, you will just select the answer you choose and hit the Submit button. And we have also received several questions from many of you in advance for today's session, so thank you for that. We will start off the town hall addressing these questions, but if you would like to submit a question for our presenters, just submit them through the Q&A inbox, and we'll try and get them as time permits. And now, that we have all the housekeeping items out of the way, I'd like to turn it over to Melissa Harman, Moss Adams Partner and Higher Education National Practice Leader, to get the town hall started. Melissa?
Thank you, Amy. Appreciate it. Well, welcome everybody to our town hall. I believe this is the third one we've done in a virtual setting like this. We know that we continue to deal with the environment, the reopening, dealing with the federal regulations, the awards, and all the issues that come with that, and some of the accounting questions. So happy to put together this panel of experts that are from our higher education group with you today. Tammy Erickson, she's a higher education partner, and she'll be joining us with some of the questions, along with Matt Parsons, who is also a higher education partner. Art No is a senior manager in our higher education practice, as is Matt Dinsdale. They are our federal experts today, and we'll be taking some of those technical award questions. Last but not least, Lauren Haverlock is our tax representation. She works in our tax exempt sector and will be handling those questions today. Their bios are located in your webcast console, so if you have any information or you need information on them, do let us know. Well, again, we did get a number of questions in advance. We will be covering those. Feel free to submit questions as we go through. We will try to get to those. If we do not, we will respond to you directly, so don't worry too much about that. But without further ado, I'm going to get us started with some broad questions specifically on some of the federal awards. So I'll start with you, Matt Parsons. So I've received my PPP loan. I applied for forgiveness, yay, and I was awarded my forgiveness. Do I record interest? What do I do with interest? There was accrued interest, it was forgiven. How do I account for that?
Yeah, thanks, Melissa. Great question. So I guess I want to start off by saying it really depends on how you originally recorded the loan to begin with. So if you had followed ASC 958-605 and accounted for the loan as a conditional contribution, then really at the time that you had met the eligibility period for the original loan, you've already would have recognized that revenue. So interest really would be a moot point at that point. We do know a lot of organizations did follow the guidance to treat it as debt under ASC 470 until you really had that full assurance that forgiveness was awarded by the SBA. And in that case, I would really say it really depends on materiality at that point. So for many of these awards, 1% interest on only over a short period of months, it might not be worth the effort of recording interest, but I definitely would look at your own circumstances. If you did, it would be factored into the extinguishment of that debt. So when you're looking at the gain that you earn from that forgiveness, it would factor in both the original loan plus that interest in the total gain recorded at that time.
Okay, perfect. Thank you, Matt. Okay, I'm going to stick with PPP so we're not jumping all over the place. So I'm just going to go through the list of PPP questions and get them out of the way. I do recognize that some of our higher education institutions that are on this call today did not qualify for it, probably didn't get it. So I know some of these questions may not be applicable to you, but maybe you sit on not-for-profit boards and it is applicable to you. So do just have a couple more we're going to go through for some of our institutions that did qualify. So on the PPP, kind of in the same line of forgiveness, I applied for my forgiveness. I submitted my application. It's been more than 90 days. What do I do now? Here I'm at year end. How do I handle this?
Yeah. Well, the first thing I would say is, have that constant communication with your bank, your lender, and really just make sure that they've followed up directly with the SBA. We've heard stories where, forgiveness has actually been granted and the communication has just gotten lost in that pipeline. So hopefully for your circumstances, that's not the case. But we've seen more and more time again where forgiveness is happening just after year end, so it really focuses again on when does that forgiveness occur, look at the key dates of when the SBA actually approved it, and that will all factor in to determine, whether the forgiveness will be able to be applied, and you'll be able to recognize that gain on extinguishment before your fiscal year end.
Great. Perfect. Thank you, Matt. Appreciate that. And one last PPP question, and then we will close out this section. I myself have dealt with this is, where does this thing go on the statement of cash flows? Is it operating? Is it investing? Is it non-cash? Is it cash? What do I do with the PPP when it comes to time to show it on my statement of cash flows now that I'm presenting my financial statements as part of the audit of financial statements?
Yeah. So again, it really kind of depends on that original method that you took to record the loan to begin with. So, if you had recorded it under, again, as a conditional contribution, and recorded it all as revenue, there really is nothing to truly pull out on the statement of cash flows because it would have all flown through your operating transactions at that time. However, if you recorded it as a loan originally, and I would imagine many of us did, that you probably recorded it as a financing activity as the proceeds were collected. And the forgiveness, that gain that you'd be recording is a reconciling item to your operating cash flow, similar to you would have in any type of unrealized or loss on your investments or other earnings. So, look at your circumstances, understand basically the original way you accounted for it, and then factor that in the statement of cash flows and following the same similar guidance. Okay,
perfect. So you gave us 3 it depends answers.
I know. I'm sorry.
No, it's good. It does. It depends. It depends on how you treated it. So appreciate that, Matt. Perfect. All right, we're going to close out PPP, but we're going to stay in kind of the vein of accounting. So Tammy, I'm going to go to you and talk about some general accounting questions as we go through this before we get into too deep on the federal awards or some of the tax regulations. A plethora, I guess, if you will, of accounting standards that are out there. So remind me again, if I have donated in-kind lease space, do I have to apply 842? What do I do with 842 if everything I have is donated to me? Oh, I think you're on mute.
Sorry about that. I had somebody say that, that's going to be everybody's last dying words is, I think you're on mute. Anyway, so if your lease is fully donated, you really have to look at the lease standard itself. Does have us look at the agreement and consider whether or not there is a contract. and if there's consideration that has been exchanged. And so if you are not exchanging any consideration, the lease is just donated to you, then really you're looking at the contribution accounting rather than the lease standard. So you'd be looking at the standard that's contributions made, contributions received, and accounting for that lease under that standard. There are some instances where you may have a lease agreement that you are paying some consideration. However, it may be below market value, in which case you really almost need to bifurcate that lease. And you would have the portion that's being paid that would be accounted under the lease standard, and the portion that's being donated that would be accounted for under the contribution standard.
Okay, perfect. Excellent. And that goes for real property, equipment, it doesn't matter, right?
Absolutely.
Okay, perfect. Okay, transitioning on to, in the, I guess, in-kind world still, the only standard that was adopted, I would say, last year by the Financial Accounting Standards Board related to not-for-profit organizations was 2020-07. So related to in-kind contributions, this standard really was not an accounting standard, but rather a presentation standard. And there was a lot of things that came with that. So a couple questions that came in on that is, related to, the disclosure of non-financial assets. There is more increased disclosures, what you have to show in your statement of activities, what has to be shown in the footnotes, but specifically to the face of the financial statements. Can you show those contributions on one line and disaggregate in the footnotes? Is that permitted? Does it have to be disaggregated on the face? What can you tell folks on that?
Yeah, great question. So the codification itself within the standard that was issued was changed, and the codification, for anybody who wants the specifics, it'd be 958-205-45-36, which does say that a nonprofit shall present the contributed non-financial assets as a separate line item in the statement of activities apart from contributions of cash and other financial assets. So it does specifically require you to separate out those non-financial assets from your financial assets on the statement. Now, the disaggregation portion of those non-financial assets, that is what then you would disclose. And there's multiple disclosure requirements, as you referred to, Melissa, that you have to make sure disclosing, but that disaggregated non-financial information would be in the footnotes. So those non-financial assets can be one line item in the statement of activities, but then disaggregated information within the footnotes that you would want to look at. And that would be within those, the information about the disaggregated information and the footnote disclosures is in 958-605-50-1.
Okay. Thank you. Perfect, Tammy. So what if my non-financial assets are a very peripheral item? They're so minor, not a big deal. Do I really have to go through all of this heavy lift?
This is, I always say, materiality is your friend. So materiality, always look at that, make sure you're talking your auditors, they're in agreement that it's not material, but you can certainly look at materiality, and you wouldn't have to necessarily disaggregate everything if it's not material to your financial statements.
Yeah, talk to your auditors.
Yes. Yeah, definitely. You don't want to end up having a disagreement about it after the fact.
Yeah, agreed. Absolutely. All right, perfect. So staying on some of the accounting standards for a bit here. So as it relates to Libor, which I think all of us are in denial that there's a change there. We've got to do something, ? Right? So there's obviously a change on that and reference rate and what we have to do going forward. It's this long implementation period. There's a lot of things going on with different milestones. So what's going on with that? What are people doing for change on that? Most of our lines of credit are Libor. What do I do as an organization with this going forward?
Yeah, that's a great question. And you're right. It seems like we've been hearing about this for quite some time. And yet I've really seen very little happening with it yet.
Yeah.
So Libor itself, it's supposed to be gone by the end of 2021. So at the end of this year, it's supposed to be phased out. And we're supposed to be going to some kind of new reference rate. Your bank should be dealing with this. So with your line of credit agreements, as those are being renewed, I would expect that your bank is putting in some kind of new reference rate in there. It's good to know because of this, there was a new standard, ASU 2020-04, which is reference rate reform, and it updated topic 848 within the codification. And that guidance, it's important because sometimes if you have debt that is in a line of credit, but maybe you have a long-term debt or you have an interest rate swap that's a hedging, changes can result in a modification of debt and the standards surrounding that, and that can impact how you're accounting for it. But this ASU that was issued 2020-04 does prepares for the changes in that reference rate to continue that contract rather than viewing it as a new contract. So you don't have to look at it as a contract modification for any of your interest rate swaps or debt instruments that you may have. So really, that helps you from an accounting perspective, but it's really waiting on your lenders to update those agreements to a different reference rate.
Perfect. Excellent. Okay. Well, I think that covers the accounting questions, Tammy, for now. So thank you so much, Matt and Tammy. We're going to move on. Oh, no, actually, I'm sorry. There's one more. I'm sorry. On revenue recognition. I apologize. This should be pretty straightforward, but question as it relates to, and it's more of a confirmation. There's so much discussion about 606. Our publics have already taken it in. Our non-publics are taking it in this year specifically. So just confirmation. Revenue from federal government awards, is it subject to ASC 606 or is it not?
Yeah, that's a great question. There's been a lot of confusion, I think, about that. And so really first you have to look at, do you have an exchange transaction or do you have a contribution? So if you have a federal award, in most cases, that's going to be a contribution that will be under the contribution standard versus topic 606. So looking at that agreement, do you have an exchange transaction? If you do, then it's topic 606. If you have a contribution, then you're going to be looking at the contribution accounting and accounting for it in that way.
Yeah. And I would just add in non-reciprocal, right? The organization itself is not getting anything from the federal award. The greater community could, but non-reciprocal to the organization.
Yeah. And that's why I said there are instances where it could be an exchange transaction. Maybe if you were doing research on behalf of the federal government, so you were receiving funds to do that research, the results of that research are going back to the federal government, then that could be an exchange transaction versus just on behalf of the greater public good. So a lot of our organizations we have a lot of research organizations. They're doing research that the government is providing funds for, but that research is broad research for the greater public good that would fall under contribution accounting.
Exactly. Perfect. Okay, now I'm for sure done with the accounting side.
Okay.
For now, until we get any other questions in. Thank you both so much. I'm going to move on to tax. Lauren, I'm going to hit you because I feel like we always leave tax to the end. So I'm going to put you right here. So tell us, I think confusing because the rules have changed. They seem to be evolving. Remind us again, ERTC, the Employment Retention Tax Credit from the IRS, changed. So what happened in 21 that we need to know about?
That is a great question. And it is really confusing because I'm a person that likes to peruse blogs and blog posts. There's a lot of firms out there that have great information, but all of that is dated. A lot of people have put up blog posts as of 2020, and if you're looking for information today, it's really hard to digest where the employee retention tax credit or the ERC, I see it referred to as both, where that stands today. We did have some changes in 2021. Some of those changes included that the credit itself was expanded to be applicable. Initially, it wasn't applicable to government entities and government instrumentalities. It was expanded, so a lot of those, for certain types, for universities, higher education organizations, and for certain types of hospitals and healthcare organizations. So that's something new. This credit is now available to certain government instrumentalities. Additionally, it got extended. It was just supposed to be for the first 2 quarters of 2021, but it's actually been extended for all 4 quarters if you meet the certain qualifications. I know that a lot of organizations initially kind of disregarded the employee retention tax credit because initially you couldn't take this if you also were trying to seek forgiveness for a PPP loan. That's changed as well. So now you can get a PPP loan and you can request the employee retention tax credit. There's just a matter of, no double dipping in those 2 arenas. So we've essentially created, and with the changes to the ERTC in 2021, there's kind of 2 different tax credits that organizations should think of. There is this 2020 credit that has one set of rules. It's applicable to organizations that have a 50% reduction of revenue up to until it only has a 20% reduction of revenue. The biggest impact is for organizations that have less than 100 employees. A lot of entities in the higher ed world, that kind of was immediately disregarded because usually there's a lot more than 100 employees in our university clients. In 2021, though, the rules are different, and that's important, and a lot of people are taking another look because of this. In 2021, what you're looking at is either a significant impact to your activities because of government orders, and significant impact due to government orders has since been defined in the IRS frequently asked questions as essentially something that either a significant activity that's interrupted from government orders would be something that would account for either 10% of an organization's gross receipts or 10% of your employees' time. Or if you don't meet that, significant activities, shut down from COVID orders, there is also a 20% reduction in revenue. So your gross receipts, rather, are at 80% of what they normally are year over year comparing 2021 to 2019. So there's a lot to digest. And I think the biggest takeaway is, don't discount that, don't discount this credit. It's a very valuable credit to a lot of organizations. The 2021 thresholds there's a couple numbers looking at your employee pool. If you have less than 500 full-time employees, and that's calculated, not full-time equivalents, but it's calculated in a specific way. If you have less than 500, you can take this credit on any wages paid. If you have more than 500, you would just be looking at wages paid or expenses paid related to compensation, in a sense, to employees who might not have been providing a full level of service to your organization. So it still can benefit larger entities if you take a look at, people who might have had reduced hours or, had some sort of furlough, part-time furlough. You can get a credit back of up to 70% of those wages.
Yeah, free
that was
money.
a long answer.
I know, a long
free
answer.
Money.
Free money.
Free money.
So I think that's what I heard.
Yeah. Yep.
Yeah, perfect. All right. Thank you for clarifying that. I think that those changes did sneak up on a lot of folks, and we do see a lot of our universities and colleges now scrambling to do the 21 piece of it.
Okay, so you have up to 3 years for that. So that's another thing to note is that you can look to amend your tax returns. If you don't think it applies, that maybe you go back and revisit. There's not a huge rush. You have up to 3 years to amend your 941, your employee tax filing, and get that credit.
Good to know. That's great info. Thank you, Lauren, for that. So I think you danced around some of this. You did use some of these definitions and some of your references, but I'm going to ask you, as it relates to the definition of a government suspension of operations, where do I find more information on that, as well as where do I find information on what a gross receipt is for a private institution?
That is a great question. So I'll first talk to the government suspension. There are definitions in the IRS's frequently asked questions. And that's something to note, that what's in these frequently asked questions are not precedents or law. It's not an official statement. It's just kind of what the IRS is thinking. So you get into their mindset a little bit. There are a couple notices that have come up that dig into certain areas in more detail, but the frequently asked question gives some good data points for us. So these would be orders, proclamations, decrees from the federal government or any state or local government that limits travel, commerce, activities as a result of COVID-19. So that limitation has to have an impact on your operations. If you just switch to online, so if you were in person and you're able to kind of transition to online, as long as there's not essentially like a 10% impact in this area, if it's less than 10%, that probably wouldn't qualify for a government order that impacts your organizations. Now, a lot of our higher education entities, you have dining services, you have auxiliary activities, you have, residence halls. And if that was interrupted, if that was impacted, you'd want to take a look at that 10% threshold to prove that impact is more than nominal. You want that more than nominal. And we know that to be approximately 10%. So certain things that don't qualify would be just the declaration of a state of emergency is not a government order. Statements from officials that were taken in, some sort of press conference is not, and a voluntary, pullback of your activities does not qualify as something that limits your activities from the government. So that was the first question. There was a second part of the question.
Oh no, that's okay. The definition of gross receipts.
Yes. The gross receipts definition, that goes back, and we've talked about this to the IRS to try to get clarity on the definition of gross receipts. When you read through the guidance on this, for nonprofit organizations, it's gross receipts is revenue from all sources derived. Gross receipts would include sales of securities. That's considered gross receipts, that gross number. Any type of activity. There are certain limitations. I believe that PPP forgiveness is not considered as gross receipts, but we haven't had any other types of exclusions, and pretty much all revenue would be included as gross receipts from that perspective. We've tried to dig down to get guidance from the IRS as to hey, if we have, some, investments in mutual funds that kind of roll over and it's kind of a sale, but it's not really a sale, is that a gross receipt? The IRS hasn't given us any clear guidance on that. They say, well, what have you done in the past? Just make sure it's consistent year over year. How you're looking at gross receipts in 2021 is the same as how you're looking at it in 2019.
Perfect. All right. Thank you for that, Lauren. NOL, there were some rule changes on the NOL related to carrybacks, and could you go through those changes and why we should consider it, why we shouldn't consider it as an institution of higher education?
Yes. So for organizations that have unrelated business income or unrelated business activities, with the CARES Act, there was a change to the NOL rules. So from a federal perspective, NOLs that arise in the years from essentially starting after December 31st, 2017, so 1/1/18, through the course of January 1st, 2021. So you're looking at 2018 through 2020, those 3 years. Those NOLs can actually be carried back to any of the 5 preceding years. And this is a great benefit. This provides kind of a cash flow benefit to organizations. So you're able to, you're going to lose that benefit in the future, right? So you're going to look backwards and apply an NOL against a prior return. You'll file an amended 990T to claim that NOL, but you get that money right away. You don't have to wait for future revenue to get that tax refund back. You can claim it going backwards. There are some drawbacks to that. You do have to file an amended 990T with the IRS, and I don't know if anyone here has tried to file anything on via paper with the IRS or get in touch with the IRS right now. They are not working. They're doing their best. They're doing their best to transition to a remote world, but it's not going to be a refund that happens anytime soon. But sooner than waiting for 20 years, So I would, if it's significant enough, I would do that. What is significant enough? I mean, there's the cost from, your tax firm's perspective of preparing an amended 990. There is also your personal cost of going through the challenges. If the IRS, gets a large enough refund claim, they might provide a correspondence to you to ask you to substantiate the NOLs and provide some information to them. So you'd have to look at the cost benefit of like the pain versus the cash flow. It's a great opportunity, and a lot of our clients are looking into that. Yeah. So, and I'd caution that every state is different. So every state is different, and the siloing rules can make it a little complex, but well worth it if you want to get those funds today.
Sure. So Lauren, we got two questions that came in exactly the same, and it's related to the gross receipts, right? And so when you're going through the gross receipts calculation, do I count the higher education emergency relief funds that came in? Is that part of my gross receipts?
As of right now, I do believe it is considered in the gross receipts. They have not specifically excluded it. And you'd look at the timing of when it's recorded as revenue to your organization. So I think you'd look to a GAAP basis on that. And I'm not sure, I'd throw it back to the audit team. When does that show up as revenue to the organization?
Yeah. So I can take that unless, Matt, you would like to. You're shaking your head like, yes, no. Well, generally, federal awards are recognized as revenue when incurred, when the expense is incurred. And that's generally when they're recognized. So, in that period that it's given or used, I should say.
That's perfect. And, it's something that if that's, the reason that this credit exists is to help organizations that have lost funds and to encourage them to keep their employees on. So, it makes sense that if it comes in as revenue in a particular month, that it would be gross receipts in that time period. I would still keep your eyes out for guidance on that. And this is another reason not to rush to obtain this credit, because the IRS's guidance on this ERC is changing month to month as they hear more feedback on it. And so if they get feedback, if you're writing letters, they love getting this information. They're not on the ground. They're not organizations. They're operating in a high level and in, tax economic world. So when we bring forth issues to them as to this, that if we're providing a good reason to not include it as gross receipts, that would be something that we want to look for a specific exclusion for.
Yeah. Perfect.
I was just going to add in real quickly. Sorry, Melissa. There might be some instances where some of the revenue recognition would be deferred, depending on when all of the criteria are met for expenditure. So just be careful, and I'm sure you can work with your tax provider to ensure that it's matching up timeliness with the revenue recognition.
Perfect. All right. Excellent. Well, thank you so much, Lauren. I'm going to shift out of tax and into basically HEERF. We're moving to HEERF at this point, or Higher Education Emergency Relief Funds. I've heard people call it HEERF too, so I recognize the acronym may be said different ways. I call it HEERF. We're going to go through some of those questions. I think I'm going to work backwards on this, on some of the questions we received, and really focus in on the ARPA portion or distributions, or HEERF III portions. So I think, Art, you're going to take the first couple on this one. As it relates to the new requirements under this, what is different? And can you highlight some of the differences as it relates to eligibility, allowability, or some of the things we need to know in the differences?
Of course. Thanks, Melissa. So as far as HEERF 3, similar to HEERF 1 and 2, you could still use those monies to defray expenses associated with the coronavirus. You could also use that to make additional financial aid grants and students. But the difference here with HEERF 3 is that there's a portion that's allocated to institutions that must be used for evidence-based practices to monitor and suppress coronavirus in accordance with the public health guidelines. Some of the examples that were provided in the U.S. Department's education frequently asked questions includes testing, prevention, and then reducing barriers to vaccination. Some of the allowable costs that they listed as examples are cleaning and disinfecting, enhancing ventilation in the classroom and common areas, setting up vaccination sites on or off campus to bring vaccines to students. And other examples includes paying for time off for staff to get the vaccine, and then providing sick time to employees to get vaccinated. So those are some of the additional allowable costs for HEERF 3.
So Art, I have seen a really good little chart out there. Do you want to let people know maybe where that resides and if they have questions on that?
Yeah, I could send out the website link to the group. There is a chart that compares the 3 different funding and what the allowable uses are, some of the different reporting requirements and stuff. So I could send out a link with that information.
Yeah. All right, perfect. Excellent. Keeping on that vein of that, and I think that's NASA, right? That has that. Is that who published
Correct.
that? That's right, NASA. So it is excellent. It is so illustrative and wonderful. I've referred to it a number of times. So if you don't have it bookmarked onto your browser, you absolutely should. It's a really good resource to take a look at. On this line, so Art and Matt, I now have my funds, right? So I've got my round 3 funds and funding. Can I use these funds to discharge student loans?
I'll take this one. So the ED Department of Ed has indicated that universities may use their institutional share to discharge the student debt. They've strongly indicated that they want you to use, if you do choose to do that, to use it to discharge debt related to students that are experiencing holds, transcript withholding, have hardships, things that might prevent them from attending the university in the future. So those students should be kind of given priority over generally discharging student debt on a more general basis. Exactly, yeah. Exactly. Right.
Yeah. Okay. Perfect. So I've been notified. I've got my funds. I've got my obligation. How long do I have to spend the funds?
You have 1 year. There's a 1 year period from the date of the most recent grant obligation. So when you received it, you should have gotten an award notice. And that award notice actually has a year-long period on there. And that is your period of what we call a period of availability, or the period in which you can use and expend those funds.
Great. So once I've received that notice of obligation, when do I draw? Do I have a timeline to draw that? What should I do once I get that notice?
So the general rule for any kind of federal aid is you're encouraged to minimize the time between the actual drawdown and the usage of those funds. With HEERF, I believe they've asked 90 days once you get your obligation to draw down your first funds. But once you do, you have to generally use it as quickly as possible. They don't want you, storing it and investing it and things like that. So, but those are the general rules.
Yeah, we don't want to do income testing on the federal audit either. So, yeah, agreed. No, all right, perfect. So, can I charge expenses? So specific, I'm going to go round 3, right? So put this, let me put some context. I'm still walking down the round 3 of funding. Can my institution charge expenses that were incurred before March 11th, 21? So the date of the law, can I charge expenses before that?
Yes, actually, you can charge any expenses starting the date, the national declaration, which I believe is March 13th, 2020. So any costs after that associated with and generally allowable under the agreement can be charged to the HEERF grant. Correct.
Yeah. Okay. Perfect. We just had one question that came in specifically related to the drawdown. Since we're still talking about the drawdown and usage there, some folks are asking, well, everything comes down in one bucket, one CFDA. How do I track what is which round? How do I know if it's CARES? How do I know it's CRISA? How do I know if it's ARPA, I don't know if there's a clear answer or the accounting on that, but how do you differentiate that? Or how have you seen institutions differentiate that?
Yeah, there's not a requirement to separate the awards into different accounts. Some universities have done that, but generally it's not necessary, right? It all goes under the same CFDA on the CFA, and they're reported in the same way. So there's not a clear rule on requiring you to separate it out. Does that answer the question? Okay.
Yeah, and I think the question is, well, and I think the timing of the funds is when they were awarded is different. So in other words, how do I know if I draw down today that that's not CRISA or round 2 and round 3 combined? I don't know if anybody have guidance on that.
Hey, Melissa, this is Matt. I was just going to add that, using the original GAN letters that you received can help you differentiate which different award that you're spending from. But you're right, as long as you're continuing to make those draws within the original period that the GAN letters were received, you should be fine.
Yeah. It's kind of timing. That's how you differentiate it, right? So agree. Perfect. So we have some more questions that have come in, and I think we've answered some of them, but can I use this new round of funding for vaccination incentives? Is that allowed under the federal award?
So I can answer this question. So the answer is yes. So as part of the allowable costs I just mentioned earlier, you can use it to pay for time off for staff to get the vaccine. You can also use it for providing sick leave to employees to get vaccinated. So there is some allowable uses there for, incentivizing people to get the vaccine.
Yeah. All right. Perfect. Also in this line, can I take indirect rates on any of this? Can I apply an overhead to this? It sounds like we've got some, I wouldn't say regulatory, but some organizations that are waffling a bit on can you, can't you? What is your recommendation to institutions of higher ed that are on this call as it relates to whether or not they should be taking an indirect charge on any of these awards?
Yeah, so for indirect costs, the Department of Education has indicated that you can use the institutional portion for indirect costs. You would essentially reference your negotiated indirect cost rate agreement if you have one with your cognizant agency. You would use that to determine what percentage to charge for indirect costs. If you don't have that, you can use a de minimis rate. I believe it's 10% to charge your institutional portion. I'll say institutional portion. They've said, for the student portion, that's 100% that goes to your students. There's no wiggle room there. But for your institutional portion, you can use indirect rate. Yes.
Okay. Perfect. Thank you for that. And then kind of along, since we're talking about the institutional portion, if I do a blanket grant, right? So whether we call it an emergency grant, whether we call it a COVID grant, whatever we call it, just a blanket grant to all students, and we apply it directly to their student account, does that qualify for the institutional portion? Does that qualify for the student portion? Which bucket should that go in, and which one does it qualify under?
So a blanket
needs blind.
Okay. Yeah. I mean, so generally you want to use the student portion for the according to need, and the institutional portion, you can use it for that. If you want to just do a blanket amount, you can use that on your institutional portion. Correct.
Yep. Great. Perfect. I'm sorry, Matt, I'm going to go back to you again. We keep getting this question. Can I, if I want to do an upgrade to my student system, my ERP system, can you use these funds to upgrade systems? Is that allowed under the relief funds?
Yeah. So when it comes to an ERP system, if it's a pre-planned upgrade, you can't use it for that. If it has nothing to do with the coronavirus pandemic. if it's related to significant changes due to the delivery of instruction due to the coronavirus, so if your existing system can't handle delivery of instruction in a new format that's required due to the work from home requirement, the coronavirus pandemic, you can utilize those funds to upgrade your system.
So if I decide, because now we're all remote, I need to upgrade my platform into the cloud-based form, or
yes.
So that's probably something that would be permissible.
Correct. I would say make sure you document it. Make sure
I can see Matt Parsons like shaking his head.
There should be documentation of yes, it was not a pre-planned cost. If you have board minutes that say we're planning to do this upgrade, and then you do the upgrade and now you're changing it, that may cause some issues. So as long as it's related to the coronavirus pandemic, it's generally allowable. I'd talk with your accountants on the specifics of your upgrade to make sure that there's nothing in there that might cause concern. But generally, if it's related to the pandemic, yes, it's allowable.
Perfect.
Under the institutional portion of funds, just want to clarify
Correct.
that too.
No, very good, Matt. Thank you. Very good. No, we wouldn't want to use student money for that. Very good. I am going to switch back to some of the lost revenue and allowability questions, but we've got a ton of HEERF questions that have come in. Just as a reminder, if we can't get through all of these, there are a lot of them coming in. We will get back to you on these and get to you directly on answers. There's a lot of questions coming in, so we so appreciate it. We know there's so many questions. We get calls almost every day on different things and what's allowable, not allowable. So remind me, and I'm going back to eligibility. We have got so much more flexibility with this third round. So can you tell me if I have DACA students, if I have international students, what this third round means and the difference on this one?
Yeah, so the Department of Education has defined essentially their definition of a student, which is a student that's enrolled in the university as of the start of pandemic, so March 13th. It now includes refugees, asylum seekers, DACA students, dreamers, and generally any similar undocumented student would qualify for the HEERF award, assuming they were enrolled at the time of the outbreak of the pandemic. Correct.
Okay, perfect. Agreed. So kind of going back into eligibility. So I'm a religious institution. There are certain prohibitions on this award specifically, but can you use any portion of it if you're a religious organization? And if so, can you tell me a little bit more about that?
Yeah, that's a good question. And I think you kind of addressed a good thing there, which is they do have rules not allowing you to use the funds for instruction and generally religious activities. However, if you're a student going to a religious institution or studying religious subjects, there's nothing disallowing your ability to award that student HEERF funds from the student or institutional portion. Again, if it's just the students attending a university that's religious-based or religious-based instruction, they can receive that funding as long as it's not, provided specifically to bolster instruction on that side of things. So, correct.
Yeah. Perfect. Excellent. This is always a good question, and I feel like I get this question once a week. So we halted our 403B contribution. We did not make it. We'd like to reinstate it, and we'd like to go back. We'd like to pay last year's. We'd like to obviously do it in this period. Am I allowed to do that? And can I use any of the HEERF funding for that specifically?
Yeah, go ahead.
Oh, were you going to answer it, Matt?
No, go ahead. Sorry.
Okay. All right. So I'll answer this. So institutions, according to the guidance, they may use their HEERF funds to pay for certain payroll costs, including employee benefits. But such costs are only for newly associated with the coronavirus, and they must be incurred on or after March 13, 2020. It goes into more detail, saying that grant funds must be used to pay for any new staff, repurposed staff, if the new staff or repurposed staff work is associated to the coronavirus. So it has to be tied to the coronavirus. So some examples includes contract tracers, IT staff, medical personnel, assistants, offering smaller class sizes to support social distancing. So this doesn't talk about being able to use those funds to pay for 403 contributions that I guess were previously reduced.
Okay, perfect. Okay, I have an easy follow-up on a comment you made, an answer you gave earlier. I'm going to switch back to her for just a second and answer some of these questions that we've come in, and then I'll probably jump back over to lost revenue. But as it relates to, you guys talked about, right, we know that we can do we can use the institutional portion of the HEERF funds to give student grants. If I choose to do that as an organization and give student grants, can I charge an indirect as well on that? If that's the route I choose to basically disseminate the funds on the institutional portion? Question mark.
That's a good question. So again,
and we can get back to this. We can get back to this group if you want to.
I'll say the indirect costs are allowed, but I'm not too sure about it. I'd have to do a little research on that one. That's a good question, though.
Perfect. Excellent. Lost revenue, we talked a little bit about gross receipts, and we've talked a little bit of, we finally have some information on lost revenue specifically. But is it allowed to show lost revenue in a specific area, or show that we have lost revenue, or take some credit for it, even if overall we didn't lose revenue, but we only lost it, let's say, on athletics, or we only lost it on room and board? Is it okay to do it that way, to disaggregate it, or do I have to do it in the aggregate?
So I can answer this question. So lost revenue for auxiliary operations, it is a source that is allowable to be reimbursed under the HEERF grants. So if there is lost revenue related to auxiliary operations due to the coronavirus, it is allowable to report it as lost revenue for that specific area, even if the institution has not lost revenue overall. Just remember that the institution must adequately document its estimate of lost revenue, must make sure that includes rationale calculations, methodology, the underlying data or budget or projections used to determine the amount of lost revenue. Just make sure it's supported with your calculations supported, so that when you're going through the audit, that you have those documents to show how that was calculated.
And on that vein, Art, I'm going to add, it was a question that we had come in today specifically. So if I had guarantees, so athletic guarantees that were out there, and I lost that money because obviously the events didn't occur, we had to cancel them, and we lost the money that was part of the guarantee, is that I would consider lost revenue? And could we use the institutional portion for that piece of it?
Yeah, that would be part of your lost revenue for the auxiliary operations. Just include that as part of the calculation when you're calculating lost revenue, that guaranteed portion.
Yep. Okay, perfect. Excellent. Great. And I'm going to go back to allowability specifically. So we've heard that certain schools are making a flat payment in lieu of increases for CARES. Is that allowed? Can you do that? So paying their faculty a flat payment out of their CARES fund, sort of like a grant to faculty. Any comments on payment to faculty, what's allowed, what's not allowed under CARES? Maybe that's probably a more specific question.
Yeah, so they've indicated generally payroll costs are allowable. However, in this situation, I would probably recommend not claiming that, just because it also indicates that they must be used to defray the costs associated with transitioning to, in remote learning. And so that doesn't really sound like something that would be associated with transitioning to remote learning, or, as Art said earlier, trying to increase or decrease class size or other costs of payroll related to responding to the pandemic. A straight stipend to all employees wouldn't really fall under that, so I would say probably not. Yes, I think that's my answer.
And I'm going to ask this, we've said this indirectly and talked about soft costs. We've not really talked about hard costs. But if I had to purchase a bunch of laptops and other equipment to get my staff, whether it's faculty or whether it's administration at an institution, ready at home, get them laptops, get them screens and monitors, can I use the institutional portion of my higher education emergency relief funds for that?
Yes, yes, you can, and you can use it for technology. You can use it for improvements, equipment, as long as it's associated with defraying the costs related to go to in-person. So if your employees have to go in-person, remote, if they have to go to remote, then you need laptops distributed for that, then that would be generally allowable, as long as, again, you're documenting it and it's used for the institutional portion of the grant.
Yeah. And we had one more. You answered this question earlier as it related to vaccines, and there was a clarifying question that came in on one of the answers that I just want to make sure that we're clear on, or we do get back to this group on. As it relates to, we said yes, if you're going to do vaccination, if you're going to do clinics, if you're going to do PPE, that is all allowable. But I think it was a little unclear. So if we're paying incentives, right, like a gift card, or we're paying a certain stipend, whatever it is that allowable under HEERF? If I'm giving out a Starbucks gift card for everybody who's going to get vaccinated at the college, can I use higher education emergency relief funds to pay for those Starbucks cards or some other cash incentive?
Yeah, Matt, could you correct me if I'm wrong with this one? I don't think you can use those HEERF funding as incentive payments to get the vaccination. Right?
Yeah, I'm not sure you could either. There's other kind of rules of federal regulation that may kind of cause concern there, I would say. Generally, it has to be reasonable and applicable and things like that, that may cause question with that type of expenditure. So yeah, I would agree with you, Art. Yeah.
So the CFRs have limitations on certain things like that, and gift cards and other things that we're saying, please make sure you're double checking with your auditors or your accountants in this area, because it is really tricky. It may feel like it's allowed under the federal regulation with HEERF, but it may be disallowed elsewhere in the CFRs, I think is what I'm hearing.
Right. And I would say generally when you're working with those types of incentives, it always kind of calls into question what kind of controls you have over that process too. So.
Yeah, perfect. Excellent. Well, I think we are at time. I want to be respectful. We've got a number of other questions we weren't able to get to. I so appreciate the great attendance we had today from everyone. Like I said, we will continue this series. I think this is our third one that we've done. We keep doing these as we get a lot of questions that come in, a lot of issues for higher education. We want to make sure that we're having these discussions. We're so appreciative. I want to give a big thank you to the presenters today. You guys did a fantastic job, and especially some of those on the fly questions that we threw at you. So nicely done. You're absolute experts in higher education. Our contact information is in the slides. If you have follow-up questions or direct questions specifically on that, or feel free to reach out to us at any time on that and any other questions you may have. Also, here is some resources for you, how to stay connected with our higher education series. Some of the resources we do have, we are issuing alerts on each of these regulations as they come out, and some other implementation guides. So for example, if you are going through the lease implementation and you are a public entity, we do have a lease implementation guide that, let me tell you, I look at probably weekly myself. It is so fantastic. So please check that out as well. If you just Google Moss Adams 842 guide, you will find it. It will come up. It is a great resource for you. Without that, I have nothing further, Amy. I'm not sure if there's any other housekeeping, but again, thanks everybody for joining us today. Have a wonderful holiday break, and take a deep breath before you close your financial year ends, and good luck with your audits this year, and absolutely reach out to us at any time. And as a reminder, we will be reaching out to those of you that we were unable to answer questions on and get back to you for further guidance. But thank you from Moss Adams and the entire team.